Hey everyone, I am coming on to do my Friday financial tidbit. Normally I do them at 9 o'clock in the morning, but today I was traveling, and so I'm going to switch it up a little bit and see if maybe the afternoon or evening time works a little bit better for everyone anyway. So for this week, and maybe next week as well, we'll go ahead and do it at a later time and see if that works out. I wanted to come on today and actually talk to you a little bit about what's going on right now with our payroll taxes. So my name is Debbie Hatch. I am a former federal employee. I am a retirement counselor and help people to understand what's happening with their finances, specifically as they move towards retirement. So what's happening right now, and it actually took effect on September 1st, is that we are seeing a deferral of our normal payroll taxes for something that's called OASDI, and that stands for Old Age Survivor and Disability Insurance. So let's back up first and talk about how this normally works so that we can see what's going on and how this change is taking place. If you work for someone else, then your employer normally pays a 6.2% payroll tax based on whatever they pay you for that paycheck. They pay 6.2%, you pay 6.2%. And in addition, so that's OASDI, that stands for Old Age Survivor and Disability Insurance, which is the technical name for Social Security's retirement program. So we're paying into this up to a limit that changes every single year. So for this year, 2020, I pay that 6.2% payroll tax unless I make up to $137,700. If I make that much, then I stop paying the tax for the rest of this calendar year, and I would start paying it again come January 1st. If I'm working in a job and I'm paying into this tax, and let me say that not everybody does, okay? In the federal government, our CSRS employees, or Civil Service Retirement System employees, they don't pay into Social Security. Some state workers don't pay into Social Security. Some teachers don't pay into Social Security. So I have to be in a job that is paying into this Social Security tax in order to accrue credits or quarters and be able to draw a Social Security retirement benefit later on. So I'm paying the 6.2 out of every paycheck unless I earn up to $137,700, and then I stop paying that tax. While I'm paying this tax, a certain amount of money, and again it changes every year, is going to get me one quarter or one credit. So the first thing that I want to do is just make sure that you understand a quarter is not a period of time. It's not. It's an amount of money. For 2020, when I'm working in a job, I'm paying in this tax, and I make $1,410, I also earn one Social Security credit or quarter. And you can use those terms interchangeably. They both mean the same thing. 1410 gets me one. I can only earn 4 in a year, no matter how much money I make. And in order for me to draw a benefit out, I am going to have to accrue 40 quarters or 40 credits. But again, remember that it is not time, it's money. 1410 gets me one. I can earn 4 in a year. It doesn't matter how much money I make. And if I need 40, that means that I've got to pay in for 10 years before I'm eligible to get anything out. Okay, and again, this is Social Security retirement. So I don't qualify to get that out unless I have my 40 credits, and I also have to be 62 or older, with 66 to 67 and so many months in between being what we call my full retirement age, when I can get 100%. We're not going to get into all of that tonight. But it's this tax, it's this 6.2% payroll tax that is being deferred right now. President Trump signed an executive order on the 8th of August saying that we were going to essentially have a tax holiday. That's what we'll call it, okay? He signed that on the 8th of August. the Treasury did not write any clarifying guidance, or at least publish it, until the 28th of August, so 3 weeks later. And the Internal Revenue Service did not put out any kind of guidance until the 31st of August. This took effect on the 1st of September. So you can see a problem right off the bat, right? This stuff is going through really, really quickly, and it's taking effect before we even have much of a chance to decipher it, to figure it out, to know what exactly is going to happen. So I will tell you, I'm coming on tonight because I wanted to discuss our Friday financial tidbit, just like I always do, but I don't have it all figured out. Nobody does. There's very little guidance that's out there. What I wanted to do is share what I do know, see if anybody comes on the stream while I'm live, ask questions. If you catch the replay, please ask your questions. Let me know, because I want to know what kind of things you're concerned about, so that as I'm doing my research and trying to get a little bit smarter on this change, I can bring forward the things that you are concerned about as well. So here's what we know. If you work for the federal government, it is not optional. And that's questions that I'm already getting. So I got an email this morning, as a matter of fact, that is asking right here, blah, blah, blah. Once we have clarity on it, I'm trying to figure out what options do I have. Is it possible for me to make optional OASDI payments in the event that my agency implements this deferral? And the answer is no. We know that much already. If you're working for the federal government and you make less than $4,000 bi-weekly. So every single 2 weeks when you're getting paid, this process is going to be looked at again. And maybe this time you don't pay the taxes, but maybe next time you have to. So if you work for the federal government and your bi-weekly paycheck is under $4,000, that's before taxes, under $4,000 before taxes, it's not optional. It's not optional. Your OASDI taxes are going to be deferred. Now, this is happening to the military as well. The military have a different number, and it is $8,666.66 per month. If you make less than that, your OASDI tax is going to be deferred. If you don't work for the federal government, then the regulations as they're currently written say that it is up to the employer whether they are going to be deferring the payroll taxes or not. That if they do collect them from people, they will have to be paid into Social Security, but that the employers can decide whether they are going to opt into the tax deferral or not. Federal government, you're in. Private sector, don't know. We'd have to look at your employer and see what they have decided to do. What else do we know about this? This means, so here's why it's happening, right? It's not, and I'm not going to have a big political debate. If you come to my classes, you know for a fact we are not going to get into all of that. Nope. And I've got in my rules right on this page a prohibition against having political debates. We're not doing it. But here's some of the stuff that is being said out there. Well, this is being done to do away with Social Security. I don't believe that that is true. This is being done as a means to try to stimulate the economy. Now, whether this works or not remains to be seen. To try to stimulate the economy, because if we're not paying that 6.2% payroll tax, that is 6.2% more that we're getting into our own paycheck every 2 weeks. So that's more money that I have coming in, and the more money I have coming in, the greater chance there is that I might go out there and spend that money. So that's the impetus behind it. Again, disagree, not agree, it really doesn't matter. That was the thought process behind it. Now, here's a concern. One concern that I'm hearing from people is, if I'm not paying that payroll tax, then am I accruing credits? And the answer is no, but remember that credits aren't time, credits are money, and it only takes an earnings of $1,410 to get 4 in a year. So will this impact earnings of credits? Potentially, but you would have to be making very little money in order for that to impact your credit accrual. Is it impacting your Social Security benefit in the long term? Maybe. Your Social Security benefit at the end, like 62 plus when you draw, very simplistically, again, we don't need to get into all the weeds tonight, but simplistically, it's going to be based upon your highest 35 years of paying in to Social Security. Your highest 35 years. So if 2020 isn't a high year, then maybe it's just not included in that high 35. Here's another thing to be aware of, though. This is not a pass on the payroll taxes. This is a deferral on the payroll taxes, which means that I don't pay them from September 1st through December 31st of 2020, but come 2021, between January 1st and April 30th, I'm essentially going to have to double up on my payroll taxes because I have to pay my regular payroll taxes for that time period, plus pay back what I didn't pay from September to December. That's what deferral means. So a lot of people are not really happy about that, right? They're going, what, can I just volunteer to pay it right now? And the answer for the federal employees, no. Is it a good idea then for you to get that 6.2% extra in your paycheck and put it into a bank account over here, hold on to it so that you can pay that back come January 2021? You might want to do that because otherwise it's not a pay cut. It's not. So I hesitate to use that word. But you're going to have a decrease of income come next year if you're paying your regular taxes plus you're paying back what you didn't pay from September to December. Do you understand what I'm saying? So it's not a cut in pay, but it's less pay coming in because you would be paying back what had been deferred. And again, that's what is concerning a lot of people. Now, could this change? Yes, it could change. The legislation does call for the Secretary of the Treasury to look at any type of proposals that might be made to actually not just defer these taxes, but to do away with them for the next few months, for the rest of this calendar year. That would take an act of Congress. So again, be aware of that. It's not just one person who's saying we're not doing this forever. That would take an act of Congress to be able to say we're going to just pass on this. You didn't have to pay it for September to December and you don't have to pay it back either. Is that going to happen? Who knows? Could it happen? Yes. Is it a possibility? Yes. What else did I want to talk to you about with this? For the federal government, and those of you that are under DFAS as a payroll office, many agencies are using DFAS, not all of them. DFAS has actually said that you will see this impact in your second paycheck in December. So you would actually start seeing this with the pay period that is ending September 12th. That's when you would see that impact. Hey, Kaylin. What about putting that extra 6.2 into TSP instead during this time? That's not a bad idea either, because what we can contribute to our TSP is from our basic pay. And very simplistically, that's the money that we get in our paychecks every single 2 weeks, base pay plus locality plus anything we always get. So is this now part of my basic pay? Yes. Could I put that into my TSP? Yes. Yeah, that's not a bad idea at all. What else did I have here? I'm talking about it being a deferral and the fact that it would have to be paid back January 1st to April 30th of next year. If it isn't, then as currently written, and again, all this stuff can change, as currently written, there would be a penalty. There would be a penalty for not having paid that back by the 30th of April. So here's what I'm going to do, and please ask questions. If you're on right now, you want to ask, let me know. If I don't know, I'm going to tell you. If you are watching the replay, please ask the questions and I will follow up. I'm going to check back on this post and see what you have coming in and make sure that I get back to you on those. But here's what I am going to do as a way to help you also figure this out and maybe figure out if you have any questions to begin with. In the comments underneath this post, I am going to put a link to the presidential order, to the Treasury guidance, and to the IRS guidance. My preference, and again, if you've been to my classes, you know this already, my preference is to go directly to the source. There are a lot of different entities, newsletters, and things like that, people who are putting out information about this, and sure, you can read it. I mean, here I am talking about it, right? You can read it, but I always want to go back to the source. I don't just want to take somebody else's interpretation of what's happening at face value. So I'm going to drop those links in there for you, and you can have a chance to look at them. I'll tell you, it's brief. It's not going to take a lot of your time to read through that. The executive order is like 3 pages. The Treasury thing, maybe 2.5 pages, not very long at all. And the IRS guidance is very brief as well. So I will pop that in. I don't see any other questions coming in here. Now, sometimes too, I'll tell you this, I'm traveling, so the Wi-Fi is not always consistent when I'm on the road, and you might be adding in questions right now and they just might not be coming through to me. If that's true, if you've been typing in questions, I'm not addressing them, it's because I can't see them. But as soon as I get off the live stream, they will come up and I will respond to them at that point. Okay, it is Friday before Labor Day. I hope that you all have a safe weekend. I hope that you have an enjoyable weekend. I hope that you have a little bit of downtime and can actually enjoy yourself. I'm really looking forward to this weekend myself. Again, let me know if you have any questions, and thank you so much for being here, Kaylin. I hope it was helpful for you. Again, I don't have a whole lot of information, but maybe it was more than you knew before, and I can certainly help you figure out the questions if you have any. So let me know. Take care, everyone.